and I have had the gift of hosting 5 seasons of US Bank's podcast, Real Good, and I am caffeinated and excited to bring you the perfect panel this morning to talk about the art of tech-led finance. We have Suhail Badran, Senior Executive Vice President and Chief Operations Officer of US Bank, Penny Lee, President and CEO of Financial Technology Association, and Alex Jimenez, Principal Consultant, AJ and Associates. And also, Alex, you're sometimes called a thought leader, so no pressure.
Yes.
Suhail, let's begin with you. How have you seen the roles of banks and financial institutions evolve since the advent of the digital age? And what do you see for their evolution for the rest of this decade?
First and foremost, great to be here with everybody, and welcome. Hope you're enjoying the food. We've come a long way, right? There's been this huge fusion. We're past the days of abacus and counting on our fingers. But there's been this great fusion of technology, but also where banks and financial institutions are going. And to put it simply, in today's world, you've got so much data, so much information coming at you. And that's really where technology is coming in to help us in terms of how do we look at information, what can we use it for. But one important part, and I'll give you more the operations side of it, is no matter how advanced you get, you cannot lose the touch and the focus of the human touch. So you're trying to intermix that digital plus human-centric design that says there are many transactions where I can use technology, whether it's an IVR, some sort of automated tool that says, you know what, I'm getting my social security check, but I just have to call in to make sure it got deposited into my account. But there are more complex transactions, and that's where that human touch comes in. So the way we think about it is technology is going to help the consumer to a certain point, but you still need that human touch along the way. And if on the other side of the phone, if you will, where our employees are using that technology so that all your information as a client is popping up and says, okay, Faith has been a client with us for a while. She's got a mortgage with us. She's got a loan. And we think that this is going to be the best next product for her, the best approach for her. That, to me, is how we're thinking about it, too. One other component would be more on the back end of things. Again, with the data, many consumers using digital technology, is how do we look at risk? You can imagine many files coming from all over the world in our wealth management platform, for example. The reconciliation side, the automation side, that has helped us quite a bit over the years and continues to do so that when team members come in, they really focus on the important things.
Alex, how has the digital transformation and integration of AI and other technologies impacted traditional roles and functions of finance departments?
Well, last year we started talking about AI a lot, right? But the reality is that in banking, we've been using AI for over a decade. And it's not generative AI, it's predictive AI, algorithms, et cetera, but underwriting, risk management, portfolio management, these are things that we've done, that we've used AI for. So it's just an evolution. But if you think about technology has impacted banking, the past 30 years greatly, right? And I don't remember this because I'm too young, but I have worked with people who remember that the end of the month with everybody was all hands doing the ledger balances for the bank, right? So those days are long gone. A lot of people don't even know that actually happened, right? But I was there to see proof machines, for seeing sorter machines, et cetera. And we've gotten rid of all of those activities by using automation, using technology. So when we talk about digital transformation and about fintech impacting banking, it's not something new. It's something we've had for quite a long time. And one of the things, I'm glad you talked about human-centered design, because one of the things that fintech has raised the bar on is not necessarily the technology, but is being really focused on your customer. So when you look at some of the more successful fintechs, they are all about customer centricity. And you know, a lot of banks talk about customer centricity, and they're not really very focused on customers. They're focused on revenues or income. But those banks that really are focused on customers are the ones that do very well. So, you know, technology is not new. It's going to continue to impact the model, and we're just going to see more and more of it. But I am actually quite hopeful that what we're going to see is more of the augmented human. The idea of having a banker at a branch or elsewhere who has all the customers' information at their fingertips, and can also get help and advice from an AI, for example, to provide service for a customer. That augmented human, to me, is really where we're going. You know, hopefully we'll stop doing things like spreading financials. You know, we have really brilliant people doing that still out there in the industry. A lot of that stuff can be done automatically, and we can apply, we can use our, you know, our human capital to do insight and find insights for customers, for managing their money, et cetera.
Penny, it looked like you wanted to add to this.
So thank you for having me. My name is Penny Lee, President and CEO of the Financial Technology Association, and we represent digitally native financial service companies. So some of them that you might recognize, such as PayPal, Square, Stripe, Block, all the one syllable, great, still with all their vowels with them. But you know, we start from, as I said, from a digitally native standpoint. So we lead with technology and trying to think through how, what the customer, what the small business, what it is that you can take to digitize, what can you do to use technology to be able to offer financial services. So currently today, 8 out of 9 Americans use a fintech product on a daily basis. 93% say it helps them save money, helps them manage, helps them invest. And so you have this real transformation. And to your point, Alex, it's not necessarily new, it's just now being digitized. And so you look at a product like a buy now, pay later, BNPL. Point of sale financing is not new. We've had layaway programs, we've had other types of programs. It's now just being digitized and put across the way, you know, mobility, and it allows you to be able to interact or to pay for a product in a way that's slightly different, but one in which the consumer is using that product. And so we are, you know, you're seeing that transformation and the interplay. You know, we all have, all the fintechs have bank partnerships. I mean, there are some that are now banks, SoFi and others that have now have a, you know, Block is a member company that has an ILC. So you are starting to see that connectivity, but enhancing the community banks, enhancing credit unions, enhancing what banks are offering to be able to have that personalized service, to be able to, you know, again, meet the consumer and the small business as to where their needs are and what the technology allows them to do to have greater access, greater credit underwriting abilities, greater ability to meet where the customer needs.
So as those products are digitalized, what are the challenges? What are the key challenges that finance leaders face when they're trying to harmonize these technologies into their operations?
Yeah, you know, part of it is what you know is having the infrastructure availability. One is cost. So there is a tremendous amount of cost, especially with integrating into a traditional financial institution and being able to offer that digital project. So that the cost is there, but also the fraud, the compliance, having the KYC, having the AML standards, the BSA, all of those aspects. And that's on the fintechs to be able to, you know, make sure that they have the compliance and the regulatory structure to be able to offer safe and sound products, working with their bank partners to ensure that they have the oversight as well and have really understanding what these products do, not causing harm for consumers or small businesses as well.
The ecosystem has grown, right? And when I say that, it's more than just technology, it's the connection. It's put the technology has put the smaller banks, credit unions at a level playing field. And so it's how to use it. And the ability, one example I was going to give earlier, for example, on technology, is the ability to what we call co-browse. So you may have an issue trying to access a specific statement or something along those lines, or you want to travel overseas and you want to do a block on your card. We have the ability now to co-browse. All you have to do is call. You could have done it on your own, but you need that human touch and help. So that helps us also understand and work with that client to help them guide, and they enjoy it because it says, okay, I'm getting an actual human to help me. But the other part on the challenge side, it's grown, and we're seeing fraud continues to be on the rise, and we're to use technology to help. So the same technology that we're using, fraudsters are probably using as well. The same AI that we talk about, they're probably looking at ways to leverage it so that, it's kind of the black hat, white hat syndrome. So we continue to keep an eye on it, but it does help in our risk management and fraud quite a bit, and we're using it today, to Alex's point.
From what I see is there are a couple of issues that are big barriers. One's leadership throughout industry. I find a lot of people who just are fighting the change that needs to be made because that's not the way we've done it. That hasn't worked. That is not the way that we want it to be because we don't want to change.
I've heard you actually say you can't be a fast follower anymore.
No, you can't. You can't be a fast follower. That's absolutely true because things move so quickly that if you're a fast follower, by the time you catch up, you're still behind, right? So that's definitely true. So there's a leadership problem. There is a strategy problem where a lot of banks are really not focused on customer. I can't tell you how many banks I've worked with or for where when we asked in the C-suite, what is your strategy, they say, we are customer-centric. We're all about our relationships. We're all about our customers. If all of the banks are all about the customer, then we're all doing the same thing, and no one's really different. The reality is the vast majority of banks are really not focused on the customer. So that's number two. So figure out your strategy and what your real strategy is. And finally, infrastructure. How many banks have actually moved to a modern core system? Not many. It is a difficult project. I worked for Zions Bancorp, and Zions moved to TCS Banks. Actually, he's been moving to TCS Banks for the past 10 years and has spent a lot of money on making that move. But what they're getting from it is a system that is not reliant on technology from the 1970s and 1980s like the majority of banks. They get a core system that's real time. And it's funny to have a situation where you have a payment process like RTP or FedNow that's real time, and yet your core system is a batch system, right? That's just a quick example of the disconnect that we have in the technology. And the other part, we talk about data and using data to be customer-centric and help clients. We don't have a good handle on the data. So until we tackle those three big issues, it's going to be hard for banks to keep up with some of the fintechs and to be able to do some of the things that we want to do for our customers. On the fintech side, however, there is a problem of scalability. So there are fintechs who are run by developers who don't have experience with banking, and the last thing they want to do is hire a banker to work for them. So it's a challenge, right? So the partnerships is the best move for both, and we're seeing more and more of that happening. But there's lots of challenges in the industry, which is why I'm in this.
I'd love to hear what Penny has to say about that one.
Well, I would say, one of the things that we do hear oftentimes from the banking community is not having the ability to do diligence. They get inundated on a daily basis. Here's a great fintech to partner with. Here's some products that are out there in the news, and not knowing who's a good actor, who's a good player, or what is a predatory product, what are they actually doing. All of the salesmen, and so
Is this where regulation comes in?
This where some regulation comes in, but it's also just trying to think through: is there a one of the things that we're working on, is there a standardized due diligence report that we could put out, so that there's a commonality of score, whether it be on the various different aspects of the product, so you have a good sense, not necessarily a good good housekeeping seal of approval, but something similar so there's a consistency that you know what these products do, what they don't do, comparative and other aspects of it. But as far as on just the developer-led founder, I will take issue on that one. You have obviously the scalability of a company such as a PayPal and Intuit, Block, others that are massive, publicly traded, massive in their scales, and obviously not at a JP Morgan Chase level, but very ubiquitous into the daily lives of consumers and small business lives as well. And so they are focused on that outcome aspect. They are focused on making sure that the consumer in the small business has a full ecosystem and a good experience on the output side of it. So they are scaling, they are massive. I mean, even on a buy now, pay later, you saw a 19% growth in just this last Cyber Monday. The incredible use that these products are starting to see and the adoption rate of them. So you have a company such as Klarna, Affirm, and others that are, Klarna in particular, is, publicly saying they're looking for the IPO aspect of it. So scalability, the growth aspect of it, I think they're all primed to be able to handle that.
Did you want to say something, Sohail?
Of course. I can't sit here. I was trying to have them debate a little bit more.
Yeah, I loved it.
No, the reality is, look, and I've worked at startups in the past, and if I think about the traditional pathway of startups, it's a one-trick pony initially, then they go through that cycle, multiple products that make sense around their core, but then 10 years later, their technology is old. And the banks are in the same position. I mean, there are banks that still have mainframes. There are still insurance companies that have mainframes. And you know what? They're workhorses. They work really well. So I think a good bank would look at, everybody's talking about the cloud, migration to cloud, AI, technology, automation. How do you stack rank what's important? And when we think about everybody wants to be customer-centric, what's the right thing to do for our clients? So when I think about the prioritization and from an operations perspective as well, what is the right thing that's going to make our clients call us less? What's the right thing that says they're going to get serviced at the right SLA levels? Where does technology come in? That helps shape not only the way I train my employees, but also helps shape the roadmap that we're going to develop for 2024 and beyond to help us get to that endpoint. And by the way, it continues to evolve. In 3 years, we're going to do it all over again.
Yeah.
It's job
So-
security.
Yeah, right. That speaks to your leadership question, Alex. And what I keep hearing is this is all so complicated, and it's never going to stop.
Right.
So how do leaders remain agile and nimble and not followers?
Yeah, I think the number one thing that a leader should be is a learner, lifetime learner. You have, if you're going to be leading an organization, you can't just say this is the way we've done it and we will maintain it, because nothing remains the same. Everything's always changing. So whether you're leading a fintech or you're leading a bank or you're leading anything, you have to be learning and changing. And you have to be looking at other industries. A lot of the challenges that we're dealing with in banking have been dealt with in other places. Retail, for example, is one that has had some of the impacts that we're seeing in the retail banking side that have been addressed by some and have not been addressed by others. And we see organizations that retailers that have gone out of business because they could not change. It's the same thing is happening in banking, right? And so you have to be doing things. You have to learn things from other industries. You have to apply new ways of thinking. And it used to be that all the leaders in banking were CPAs. All of us were credit trained. Now you have to be able to talk about technology. You're gonna be able to talk about what AI is all about. You're gonna be able to speak about fintech. You have to be able to talk to a fintech developer and explain what it is that you want to do.
See,
All those things you need.
I would just say no one person can do all of this, and the power of the team comes in handy.
Oh,
so
absolutely.
when you have the mix of the expertise, but also not just on the product side, the banking side, the credit side, but also what's coming ahead from a regulation perspective, right? And I'd love to hear your thoughts because technology is always going to be ahead. and regulators are going to follow, but I don't know how you see it.
Yeah, I mean, we we innovate faster than regulation. There's no question about that. And so what we try to do is educate along the way, kind of where these products are going, how they're interacting, and ensuring, again, especially from the provincial regulators, the notion of, their whole focus is on safety, soundness, and fairness, and wanting to make sure that they understand the full product life cycle or understand what these products do and oftentimes what they don't do. Because there's a natural assumption a lot of times if you're online, digitally native, serving an underbanked or underserved community with a credit product, you must be predatory. And so trying to demystify and break that down to understand kind of what these products, so you're not being pulled into a predatory loan product when in fact you have a zero interest product. And so wanting to make sure that that regulation, but where you're going is we're seeing incredible increased activity, especially in the OCC, the Office of the Comptroller of the Currency, the FDIC, and even somewhat in the Fed, a higher degree of scrutiny over the bank fintech partnerships to making sure that you don't have liquidity issues, that to make sure that you don't have, some of the issues with Silicon Valley Bank and others were kind of blamed on, kind of that run was blamed on the portability from fintechs and being able to have a $40 billion run in 24 hours on a bank. There was other systemic issues with SVB that I think we all can acknowledge. Yes, there's the transmission that made it faster and quicker to be able to move funds and to move deposits outside, but I don't think that fintech was responsible for SVB's downfall. And so, where you have the regulators going is you have a Consumer Financial Protection Bureau, CFPB, looking much more engaged. If the product touches a consumer, they consider them part. They're, just issued a larger, what they call a larger participant rule to kind of oversee a lot of large, big tech embedded finance products. So Apple, PayPal, Block, and others are now asking them to be under supervision. You also, though, have an interesting thing that should be finalized next year, which is open banking. The open banking rule, which is the notion that consumers have the right to their financial data and to be able to have the portability of that. That is something that has been occurring and it has been involved, but now it's going to be codified and exactly what can be shared, what can be transmitted, how they can interact with a third party, a financial app. And so you're going to see a lot more competitive, I think, a much more competitive landscape because you will have that portability of deposits in a much faster way, in a much easier way, or being able to interact. So that's the first and foremost is the open banking and the codification of the consumer's right for their own financial data. I would say we are still lagging behind. The U.S. does not have a federal data privacy rule. Would still love to see that. We're still subject to 50 different states in the District of Columbia and Puerto Rico and other territories. So I would still love to see that because to make sure that everybody understands how the data can be transported, how it can be used, how it can be cleaned, how it can be used in secondary, third party, and other uses. So there's a lot that the U.S. still needs to do. First and foremost, though, will be the interesting aspect of open banking, and then also as you're starting to see the push with FedNow and some other, as they're trying to catch up in real-time payments as well. But we'll always continue to lag behind, and then crypto and others, not my expertise. That's a SEC, CF, that's a full alphabet soup worth of regulators looking at that and how to regulate crypto and digital assets.
We keep mentioning the ideal amount of human touch, whatever that means. And I wonder how finance leaders can apply that to their colleagues, to their professionals. How can finance leaders ensure that investment in technology doesn't diminish the role of financial professionals, but rather enhances their ability to communicate with clients?
Well, I think it goes to what I said before about being the augmented human, right? There's always going to be a need for the face-to-face, or perhaps not face-to-face, but personal touch. And people are, I do not like talk to advisors. I do everything with technology, right? All my investments on robo-advisors, but even robo-advisors now actually have human advisors that they can assign you if you so want, right? I think the majority of people are not like me. The majority of people do want to talk to a human, do want to be able to have the conversation and so on. But what technology will help is give them more tools to be able to do that better and not spend all their time crunching numbers, but spending their time with that relationship, understanding the needs of the customer, et cetera. So I think that's the key. Again, we shouldn't have, some very smart people just doing data entry. That should all be gone, and we still do tons of that through our banks and other financial institutions. So it's all about that as far as I'm concerned.
Faith, I can cut my own hair, but you don't want to see that, right?
I cut my own hair.
A little bit different story there. So the reality is, if you create an environment where it's self-service to a point where you need somebody and that somebody's available at that point. But to your question about, it's a change management aspect of internally that adoption. You need that new blood in the ecosystem, wherever it may be. It could be a new environment, a more traditional environment that says, this is the why we're moving in that direction. This is the why we have to make the change. Otherwise, people are going to, leap us. And if you're able to find that balance between that transformation, but also continuing to execute on the business as usual, and that's one thing I've learned and I've seen over many years, which is when you talk about transformation and everybody jumps in, we need to go agile, we need to go to automation. You got, regardless of the size of the organization, everybody trying to do it. You got to split your teams. You got some people who are really good at executing every day, and you got some people who are really good at looking around the corner and saying, this is how that applies to that environment. And the truth in the adoption is that change management in between that says, this is how we take the old and turn it into the new. And again, it's a cycle, though.
We have just a few minutes left, so if there are any questions from the audience, I would love to make time for that. Does anybody? Yes?
I just wonder if it makes it easier or more, or if you give any thought to the community investment and trying to address poverty issues that some of the banks have been wonderful about.
I can comment a little bit on this. The question was around CRA. Will technology help on the CRA, having to deal with 75 different documents and a lot of data there as well, and where do you kind of place your bet in which part of the community as well? And that's something we take very seriously at the bank. We do use data for it, right? So you can imagine a flood of information, that a lot of need, a lot of demand. And our team basically leverages that data using technology that we sort of talked about a little bit here to figure out where are the pockets that if we were to make that investment, we will truly make and see that biggest change in that community that we're trying to serve. So we have 2,200 plus branches all over the country. And being able to tie that CRA algorithm, if you will, into those specific areas is really key for us. So technology does definitely help us there.
And I would say, the other thing that, we've seen it, and Alex kind of mentioned it too, is you do still have banking deserts in the country. And so trying to, bridge where those gaps might be and using technology, as Alex was mentioning on credit underwriting, being able to, I would say the FICO score is a little bit of a black box, and 3 digits doesn't necessarily really determine whether or not you're creditworthy. So using AI and other companies, the technology that's available to think through kind of who is worthy of a credit underwriting or what that capability might be, so you can kind of break through some of the deserts that are out there but have the availability to affordable capital.
One of the challenges we have, though, is we still tie the CRA zones to where we have branches. But if you're a digital bank, what do you cover, right? So there's got to be some direction from regulators on where that, how do we play if you're a digital-only bank? And they should also be involved, right? we need a
There's
level
rule
playing
there's
field,
a rule
right?
coming out.
Right. So how do we say, you know, you as bank has these regions because they have branches, but SoFi, what do they have? What CRA commitments do they make, right? SoFi is probably a bad example, but.
So we've got about a minute left. I want to be mindful of everyone's time. Where do you see, 5 years ago, this conversation would have been different. In the next 5 years, what are you most excited about? What technology are you most excited about to see reach scale? And what do you think we'll be talking about in the next 5 years?
I hate to say AI because it's the buzzword, but AI is the
It's not going away.
And it's not just the generative AI. I think generative AI will be entirely different just in a few months. But I think there's a lot of capabilities there that we have yet to scratch, and to be able to really change the way that we do banking.
I would say I'm curious to follow distributed ledger technology and that greater adoption when you have the ability to put things on a blockchain and see the full life of a financial technology or a financial transaction. So curious to see as it becomes greater adopted by not only just a digital asset company, but also traditional companies, kind of how that will change the business of banking.
5 years ago, I don't think we would have been on stage without talking about Bitcoin or blockchain, right? And look at where we are today. 5 years ago, we talked about data as the new oil, and we don't talk about it anymore. So I'm excited about the tools, the predictive side, continued automation, predictive AI, more than the generative side, because that's going to help us reach our potential. And as we, as an ecosystem in financial services, continue to grow, the ability to automate a lot of these things and not have that human touch in the middle of the process, but have it focus on that human-centric interaction later.
You've given me big goals, Alex. I want to be an augmented human. So I want to thank everybody on behalf of U.S. Bank. Thank you all for being here. I hope I am not replaced by a hologram in 5 years. And so enjoy your day and indulge in the human touch here. Thank you all so much.
Thank you, everyone.